Hey guys, on to lesson 14. So this is where it's going to get interesting from now onward. We've done some pretty decent breakdowns on the higher time frames. Okay, so what we need to understand going forward onto the smaller intraday time frames is that on the left here, what we've done is we've set up the overall top-down bias, so to speak. It's always good to have a bias, but when we're trading intraday, try not to get glued to that bias. And what I mean by that is, for instance, GBP AUD, we broke down through 1.88. Okay, we took out this point here. As you can see, this is the break. Then we had to retest, and then we had another retest, and then we had another price drive right into 1.8 once again. Now, what we can more or less gather from this chart here on the left is that there were various retests, and this is the price action on the 15-minute time frame. So when we had the break, which was, where was the break here? Okay, so there's the break. So this is the break. Okay, and look at the price action, how choppy and wild these whipsaws actually are. Now, a lot of us, again, going back to the original point of bias, the bias is short, but look at the intraday time frames. Some of these are 80, 100 pip moves, 150 pip moves. Okay, consolidation, then drop. So if I just pull this out, look at this mad price behavior. From the original break over there, it's not every time going to be so straightforward that price moves directly in our favor. So what we have to do is mark out the lower time frames in the correct manner. And what I'm going to teach you over the next few lessons is the cycles, the intraday cycles, the traps, so to speak, because what we need to gather and understand is that the market is governed by liquidity providers, smart money, market makers, whatever you want to call them. Nobody knows truly how, but a lot of money gets pumped into the market to kill off retail traders using, mainstream avenues of technical analysis and so forth. And also, the biggest ploy here is that the emotions of people get played upon. All right. So what I'm going to show you going forward will transform the way you look at the market, will transform your overall trading, and then combined, again, it may take some of you guys quite a while, it's just about dedication, combined with our overall scope of how we've broken the market down so far, GBP AUD, we've got gold over here as well. Let's have a look at gold. I'll break each one down. You know what I've done as well, guys, as I've removed GBP USD because it's quite frustrating. I've never really been a fan of that pair personally, but I'm going to replace with GBP JPY because it works extremely well with what I'm going to show and present to you. All right, so with all of that being said, let's get straight to it. I'm going to go through various tools, and with this, the timings I'm about to lay out, it's going to give you so much more clarity on market movements and when to trade. First and foremost, I'm recording this video on a Sunday morning and it's 12 minutes past 7. Make sure you have London set on your charts, please. UTC, London. Okay, for all of your charts. Step 1. All right, so GA, as you can see, we broke that region, test, and we're now heading lower. We've broken this little 4-hour area right there too, and we're retesting it on last Friday's candle, the candle of last Friday. And I'm still looking at the market plummeting into this area right here. And look how clean this chart is. Again, guys, we're keeping this clean throughout and just extending our areas and levels when we need to. So we're just working directly, mainly on a 4-hour perspective over here. And if you look at the daily as well, daily, dead candle, shooting star, break, retest, and now we're going to get a continuation to the downside. Weekly, a little bit stagnant there, but yeah, I do believe momentum is going to step in. Now, let's get to it. So expand intraday chart. Now I did say we're going to remove the hourly, we might work on the 30-minute and so forth. Now the 30-minute and the 15-minute are going to be the main time frames for intraday, and what we need to do is we need to firstly go to the 15-minute time frame. Now a fresh week will do this to the right hand side. But for the examples that I'm going to present to you, and over the next few videos, this will make a lot more sense. And then I'm going to be recording in the week every other day just to give you guys updates and show you where trade entries are. Okay, market psychology. So we're focusing on 3 main sessions: Asia, London, US. Now let's go back to the, let's look at the calendar. I'm no good with dates or times. I'm always in some kind of time warp myself. So we're here today, Sunday, last Sunday. So Monday 28th, so let's find the 28th on the chart. Right, so 28, right, horizontal line, vertical line on the 28th. Okay? 12 o'clock, so Sunday overlap. All right, so let's have a look at where Sunday opened. Okay, just here, so 12. I'm just going to start off with last week. So guys, right, the horizontal line, before we draw anything else on this chart, we keep it clean. The previous video, I did go ahead and show you a few standard technical elements like the counter trend lines, mini counter trend lines, and so on. But this is where it really gets interesting. Now, if you go into here and go to vertical line, it's option V on a Mac. So we can just go option V, okay? So at first marking, you can write this down, it's 12 p.m., 00. Next marking, the next marking is 8 a.m. Okay, London start. The next marking is 2 p.m., 1400 hours. And again, make sure you have UTC London on here, wherever you are in the world, because this is going to clear up things. You know, I don't want people in other parts of the world using different, it's going to be very, very, very messy. So please just stick with London and let's try to get the London time zones. That's one benefit of actually living over here in the UK, is that we have the London time zone, you know, right in the morning. So I wake up early on. You can wake up at 5, 5:30, 6, 6:30. And this is what we're going to be tracking, and it'll all make sense in a moment. But please, please, please choose London. The next one we're going to place on there is 6 o'clock, 1800 hours. Okay. So far we have Asia open, London open, New York open. This is the time when people go home from London. It's important. And then once again, let's go find 00. So that's 1 day more or less marked out, okay? 1 day marked out. So I'm just going to do this for the whole week as an example. So just bear with me. So then we go to 8, okay? Boom, 8, and then 1400 hours. Then we're going to go to 6 p.m. Then we are going to go to 00, so that's 2 days. Over here, 8 a.m., 1400 hours. Boom, it's another day. Next, same thing, 8 a.m. So I'm just pressing option V right now on the Mac. There we go, and there we go. Okay, so 8 a.m, where are you? Nearly there. So 8 a.m, then we go, that's 2 p.m, Friday, and then we have closure, which is there. But I'm not going to play around with this, actually. I can just put that on right now, and I'll update it in the next videos. So what I've done for the entire week, I've marked on all of the session times. Okay? So, thesis. Let's start over here. So every day, guys, please mark on these session times. Right, generally speaking, so if we look at Asia on the Sunday, Now, if we go over to, again, we do our analysis, and these are our main regions here, 1, 2, 3. And so we can also copy and paste them over to the right-hand side. Remember what I said. We'll get to that soon. However, let's say the bias is bearish, sorry, over on the higher time frames. But again, especially with GA, gold, and GJ, they're quite volatile pairs, which is good because the volume and the volatility is going to allow us to find very, very good trade setups. And as we become more advanced with reading the market as so, we can really just sit there and catch these moves all day. the majority and have a really, really high win rate and a decent risk reward profile. Okay, so anyway, Sunday night, again, I've recommended that we don't really trade on Sunday nights. Try not to do what the retail herd does, sit there, you know, maybe losing positions from the previous week or just itching to get into a trade. I wouldn't recommend it. So what I would do, as you can see here, market opens, 12 o'clock comes, Asia makes a low and Asia makes a high, which is more or less bang on the overlap, 8 a.m. Okay, so all the way up there. You can see if I could just move this out of the way, bang. And then it's the low is here. So what you want to do every single day is to get really, really good entries, is understand simple principles of sessions, overlaps, and how London and US mainly respect what Asia's done, okay? And the psychology behind market makers. The market will consolidate more for around 8 to 10 hours per day overall, and the majority of that consolidation will be in Asia. Not all of the time, but it will. If not, it may be passed over to London or US, depending on the movements or the fundamentals that we are waiting for in terms of, you know, let's say non-farm payrolls on Friday, market may consolidate maybe even a few days. So we have to always be aware of what fundamentals are about to be released. So anyway, what we want to do here is we want to mark on the highs and lows of each session. And this is how we do it. Take this tool, okay, and here's the low. This is the low, but again, same technique, okay. And normally you bring it all the way to the right hand side. So just imagine that none of this price action is actually here right now, okay. So there's the Asia low, respected, boom, market moves back to the upside and makes a high. Now this candle over here is a little bit too big for a range. The ranges, you want to keep them more or less this size, okay. So what I'm going to do is just going to copy and paste that because it's too big of a gap, and I'm going to place it on where the bodies are, and I'm not going to drag it all the way up there because it's too wide, it's too thick. You want to keep it around this size going forward, and again, with practice you'll find this rhythm yourself. So what's actually happened here, okay, before we even move on, is that Asia set a low, Asia set a high. Look at this massive ass volume spike. I'm going to show you some other tools in a moment, probably in the next video to tell you the truth, how we can read such volume spikes as real or fake. Very, very easy. The market puts in a shooting star right here and then declines that area. Price moves back to the downside. Okay, look at that. Price moves back to the downside, and look at this hefty candle right here. Price drive, but look at the price drive. Respects Asia's low, okay, has a rebound. Now, price action, the actual price from A to B over here. So the low is 85 and the high is 28. Okay, that's a good amount of pips. It's just over 40 pips from here to here. All right. Now, the 30-minute chart, we'll get into this afterwards. The 30-minute gives us so many clues as well, and we'll get into this later. But back to the 15-minute. By the way, these markings that I'm drawing on right now, we do it on the 15-minute chart only, okay? And then we utilize the 30 to find entries and confirmation, and you guys have to find your feet from there. So anyway, let me extend this across a little bit. It's got the lows there. All right, so a 40 pip boost back to the upside. And what time is this? This is 9:45 in the morning. Because remember, Sunday into Monday, the markets are relatively, I wouldn't say dead, but there's a lot of trick moves, okay? Market forcefully pushes its way back into the Asia low. So it's respected the Asia low twice, 1, 2. And look what we see. 1, 2, 3, 4, 5, 6 spikes onto the range. And then market decides to reverse. Buy entries all day. Buy opportunities all day. Very, very tight stops. And look where it's run into, okay? So market's picked up, 12, 1 p.m. This is the session overlap at 2 p.m. US session started. Then market boosts its way back into Asia high. As you can see right here, 1.8850 as well was tapped and achieved. 1, 2, 3, 4, 5, 6. 6 rejections. This is screaming sell. Okay, got the bearish engulf in there. You've got various rejections of price, last rejection of price, and then we forcefully went from, okay, Body close 1.8832 into 1.8801. 30 pips, 31 pips in one bar. Then market starts to slow down, okay, and then 6 p.m. comes, whereas London go home. Market then consolidates for the rest of the night. Roll over, Asia starts again, so on and so forth. Okay, so that's one day of markups. What you also could do is mark up the highs and lows of London and the highs and lows of the US. Just ensure that it doesn't get too messy. And we also need to take into consideration the weekly high and low, because over here, guys, for the week, that is the high of the week across here. Okay, and you can use that. You can change the color of it if you wish, or if it's a low of the week, or if the low or the high of the week changes, always map on the high and the low of the week when it's made. So anyway, bringing across London high over there. Okay, so we've got London low, London high, US high. US low is next to Asia, so we don't really have to worry about that too much. This gap here, from 6 p.m. until 10, this is dead market gap. Okay, but we can still take note of the highs and lows. So if I brought that high across and boom, you know, really translated that over to the right hand side, we can see where market reacted a few times to give us good short potentials. All right, so going to the right hand side. So again, as I run through these examples, you can take notes and you can follow me if you wish. All right, so Asia now changes. Okay, so Asia here, as you can see, it makes a high off the back end of that wick and a small body. So what I'm going to do, I'm going to take the wick into the body and I'm going to just bring that across into the next few sessions, right, like so. This area, because it was the low of the week and it was the first Asia session printed, I'm going to bring this all the way across too, just for now. But let's have a look at the dynamics behind what's actually going on here. So Asia prints a high and then it breaks down and melts through the previous Asia and London lows. Market structure has now changed. Sink, sink, sink. 1, 2, there's the lows right there. But because, again, that's the low of Asia, the high of Asia has been marked on. But because, again, the wick here, sorry, is quite long. I can just take an average of that and then just bring that across right there. Bring this across as well. Again, we have multiple overlaps because I'm going back in time and I'm showing you this principle and this process. But once I've done this one, I'll show you gold. We'll break GJ down together on the next few videos, and then on live market exercises, you can see this clearly in real time. So it isn't as messy, but still keep up. Asia high, Asia low. US comes through, snaps right through Asia low. This is a complete and utter trap move. Massive trap move. So let's just look at how that is on the charts over here. So that's that, as you can see, okay? So again, whilst you're doing this, you're always going to be following suit with 4 hourly, mainly. And our markings on the 4 hour. It's going to give you the highest opportunity and the highest risk-reward ratio, and also just the highest probability trading and piece of analysis in general when you combine the 4 with the intraday, and keep an eye on that. So anyway, we found support here. Now what we can look at is we tap 8.7 back to the upside. Then we have a retest with these pin bars right here as well. Look at the 5 minute. How that looks over here. This is a 5 minute time frame. You can find so many opportunities on here as well once you've really refined your skill. Okay, cool. Anyway, just want to see how that looked. Right, what we can then see, guys, is the Asia low. We breached it for a while. This would be quite dangerous. The only short opportunity there would be here, up on the clean break, and you would have to be very, very careful. These whipsaws will happen time and time again. So what actually happened here is trap move, market dumps into London. Okay, so it breaks the Asia low into London. We then break back above the Asia low, retest the Asia low, and look where market flies into. back into Asia high over here, respects Asia high. So then London, once Asia high has been respected, the psychology behind this is to say, okay, cool, I don't want to, I want to respect what Asia did. London have now put in a fake trap move. So many people would have been short trapped here, 8-7 back into 8-7-9-8. That's a 100 pip trap move. Then what people would go in and look at is that trap move is this one here. That's a trap move. Okay, and look where the liquidity is picked up into our region on the 4-hourly. So again, we don't need to over congest the chart, but always keep an eye on where the price is heading into. And over here, the market is boom, because remember the 4-hourly rules in the smaller time frames, but the smaller time frames is where you're going to see a lot of the manipulation happen, and also the algos at play. So boom, we smash back in to this area. It's that wick there. Okay, it's that. Then we have a secondary pump, which is this one. Looking good, looking good. So back over here on the 15-minute time frame, a lot of people would see this and start to go long. But look what it's done. It's just tapped into the Asia high. It's respected Asia high. It hasn't done it. It doesn't want to break that. Broke Asia low, then come back up to Asia high. And we also, again, this band across here was the first low of the week. To be honest, right now, we don't need that anymore because we're playing in this cycle of the day. Market's respecting it. Anyway, we fall back to the downside and look where we come into. Look at where we drop into. The Asia low right here, 1, 2, 3, pin bar, boom, back to the upside. And then we go and spike through Asia high. Take out the previous. What I'm trying to get across is that there's so many, this is where all of the trap moves happen on the intraday time frame. And that's why we have to utilize this in the best manner in order for us to actually make money, because nobody makes money without utilizing market, standard market behavior, psychology of continents is more or less what we're going into right now, and having professional markups and understanding where smart money is and understanding the market for what it is, which is a playground for these guys to absolutely drain retail traders. So imagine here, people are stuck short, people are stuck long. But look where it's respected. Back to the downside. Oh, GA, we're ready to come back down. Boom, respects Asia's low. Spikes back to the upside because people would have stop losses right here. So it's spiked through that, ensuring that people are stopped out. But it's closed back below Asia's low. And look what happens then. And this is US session. US overlap. Boom. Come in. We test the lows at 3 o'clock in the afternoon. Asia lows again. Then what happens? Holy shit. Price boost. Straight into 1.88 right there. Respects Asia highs once more. And this is just a daily cycle of trap, trap, trap. But again, if you use the 15-minute time frame, 30-minute and eventually the 5-minute, you can catch all of these moves. Close above, close below. Looking at standard pins. This is why I love the black candles, because it gives us an idea of where we should push our focus, which is mainly to the session times, the pure price action, the wicks, some candle patterns that we may see. But let's focus on this. So America test the lows of oh shit, sorry, we need to put the lows of London on over here. Almost forgot about that one. So that's how we would do it. Just drag that across. Don't really think there's much in terms of the market testing that anytime soon in this picture. But anyway, huge boost. So we've gone from the lows 1.8736, 1.8807. Not a joke. It's a good amount of pips. Then people would be like, oh my god, it's breaking out. And again, this could be fundamentals. I'm not covering fundamentals at the moment on this chart, but there could be fundamentals at play. Market whips back down. Price is now back below Asia's low. And look what it does. It then dumps through Asia low. And you can see this pattern, this cycle, and look. So for instance, you follow this time schedule, you follow this time routine, 8 to 6. This is generally where the market goes quiet. We may see a little bit of movement, but whatever. And then here also, you know what? This is what you do. This is the US session low. Bring this across. See if the market respects that. Oops, I don't want an alarm there. Nope. For the next day also. Anyway, See, it's such... Come on, move, man. Sorry about this, guys. Why is it doing this to me? Okay, whatever. And that's one cycle complete. But now I've showed you the highs and lows of each session, how to mark it, pristine session times, where to trade to and from, using it with overall what we've done so far over here on the left. It's quite straightforward. So this this move is this here, this huge bearish engulfing formation. Oh no, it's not, sorry, it's this one here. So I'm so much to go over. So keeping an eye on this to the left, we have this entire area from 8785, 8811, okay, is a huge 4-hour liquidity region. So bear that in mind. All right, anyway, so we consolidate on America's low. And again, the quicker you spot this, the lows and the highs of the session, you can base trades off it. Maybe in the next few hours, we may see rebounds in there, and then boom, back to the upside we go, as an example here. And what you can see is at 12 p.m. 00, look, Asia makes a high. Asia makes a high right there. Take that one off for now. So we have the lows marked on, and then what I'm going to do is simply go ahead and mark out the highs. Pull this one across. So you're doing this every day. Asia high low, London high low, US high low. Some of the highs and lows of the week, it's good to keep them on. If we do spot that and just drag them all the way across. As I say, I'm just showing you guys examples going through I'm just opening your eyes to a different world right here. Okay, so we make the high, boom, slam into the lows, and look where it tests. US low to the T. Consolidates through London. London spikes up into Asia's high. Respects Asia's high. So London, sorry, it's not London. There's too many numbers going on right now. It's early. Sorry, Asia makes the high. Asia forcefully dumps the price into US low from the previous day. Okay, we consolidate in Asia. Asia pushes it up, and on the overlap, 8 a.m., we have the push there. Okay, let's move that out of the way. There you see that there. So we have the consolidation in Asia. London, boom, forcefully pushed the price down into the same band. Spikes. This is rejection, guys. This is buy. By the time the market's here, it might show you a bullish engulfing. This is where retail people get in. Then by the time retail people are in the trade, we've already made 30 pips, and their risk reward is pretty shit. So on and so forth. Right, so that's the previous Asia high right there. So let's bring that across. So you can just keep dragging some areas across, and until the pattern changes, until the market breaks out. But what has happened now in London is London, boom. So many people will be short here. Okay. The market shows us it doesn't want to go short. It's rejecting the areas. Buy. It breaks Asia's high, okay, retests Asia's high from the previous day right here. Look, it's that perfect test. All right, back into 1.88 to the fucking pip. To the pip. And then market, bang, straight back below Asia's high. At the same time, guys, look what it's doing on the higher time frame. So here, look at my crosshair. That's that. Look at that huge price push into the 4-hour liquidity region here. Then the market is pushed down. Bearish engulfing is formed afterwards. But again, this is a huge move. Huge move. What we can see, bringing this over a little bit, is where the price has reacted to. Now, this is really frustrating me. I wonder if I can just move it over. No, it doesn't want to delete. Cool. Anyway, so we've gone from London session. We take the price is taken all the way through, respects this very, very well. Price comes back down, retest 1, retest 2, retest 3, retest 4. US opens, America are like, fuck you. Let's push this thing down, bang, straight back into previous America lows from the following day, from the previous day, sorry. Market consolidates, we go into the high here as well. So the London low and London high are more or less marked on because they respect previous highs. US low, we have a small low over here which we could drag to the right hand side. But anyway, 6 p.m. market just pulls up a little bit and then starts to sink in between the time of 6 p.m. and then 12. Okay, cycle complete. What I'm going to do, I'm just going to remove all of these just so I can go into the remaining price action for the week. But I hope you understood what went on over there. Session highs, session lows. Right, let's have a little bit of a restart. Okay, so market is pushed down 31st. Now on the 31st, the market is pushed down and Asia does make a nice low, low number 1. And this is what happens over and over and over again. Okay, so we found the low. Okay, Asia high is just here. We can deal with that afterwards. Asia high is right there. I'll tell you the truth, right on the overlap. Overlaps, if it makes a high or low on the overlap, by all means, bring that across. Use it. Alright, so bottom line is, what's happened? Asia, forcefully pushed to the low. Secondary test. Look, it's hit 8650 right here. Money has been picked up, cha-ching, and that is that drop. So if we look at the Asia and look at the 4-hour close, look at the 4-hour close, doji, indecisive, and then over here, this is where we can really fucking annihilate this back to the upside, more or less like a double bottom, if you will. But the 4-hour also confirms that a potential reversal could take place at this point in time. Going through. Right, Asia, we lift off, go into London. London give us a mini little fake out there. This little mini fake out. And then, boom, price spike all the way back to the upside. Where I can see this price reacting to is if you look at the previous London highs. Let's mark on the previous London highs across here. So in London, look what London's now done again. It's respected the previous London high. And if I bring this marking over to the right hand side, and this is why when you learn this principle, and again zoom out on these intraday charts and focus and really learn and master the sessions, you can clearly see areas in which the price, okay, so London's now pushed the price back into London highs. We've taken out the highs of the gap into from 6 until 10. We don't really have to mark this area on, we can just use it by eye. But we've run into that area, 1.88 again, and then we've collapsed into a low. Collapsed into a low right here. Then we've opened in the US session for that day. US has made a low right there, so I'm going to go ahead and mark that on from body across. But US has run price back up as well into the same area, into the same zone, pull back. Here again, 6 p.m, 1-2 tests, and 6 p.m. After that into 9:30 p.m. and 9:45 p.m. you can see where it's come into this low and it's rebounded once more into Asia. Asia has now mapped out the high and taken it back into AA. So we have multiple tests into AA, which is the London high from the previous cycle of the week. So again, guys, this is where we can really get precise and accurate trades. And again, once we've done this video, we'll map out gold together, then we'll go into GJ, and then from there onward, I'm going to teach you guys how to also read volume. I'll drop that in one of the videos, put the volume bar on the bottom here, so we can actually spot fake moves. So when price is being driven into these areas, if the volume is low and we can read it on the bars, it's more than likely to be a false move and we need to go in the opposite direction. But again, you can see the accuracy here, and this is where market makers are playing sessions throughout the week, creating the highs, creating the lows, running it back into highs and lows. And then again, that's why if we just only worked on the higher term bias, we're not really going to get anywhere because of this chop that's happening. And it's hundreds of pips at times, but if we can read this as well and really merge our trading style and remain open-minded, then you'll see how this is just going to transform the way you've looked at the market and how freaking simple it is. Anyway, Going into London session in the morning, we've had more spikes in London, and then on the US overlap, directly the liquidities, boom, volume to the downside, retest of previous. So again, I think America are thinking about what we did in the last session. London are thinking about what we did in the last London session. Highs. America have dumped the price, broke a previous America lows. So at 2 p.m. it broke the 3 p.m. lows. Okay, and price has been driven into the Asia high / London lows of the previous week. What we can also see, okay, over here, the London, this is just a very simple, precise area. Sometimes I like to mix it up, put a horizontal ray, maybe at the bottom there. What we've done is the price has been dumped into that region. This was Friday, and it's come back up and it's just retesting that area. That's a that's an intraday, just a standard intraday support zone, because it's not the London low, because the London low is here next to the Asia low. I didn't map that out because it's just a bit congested, but this area is vital because you can see here test, and market. I am now expecting market to drive into these Asia lows and also just follow suit, guys, into the 4-hour liquidity region right there. So that, it's quite low on the chart. And we've got a good few hundred pip drop, I believe. But anyway, I hope you learned from this video. So you've learned about the session times, a little bit about the psychology of sessions, how to put the markings on. So from next week, I'll probably keep the top band on because that was the low, that was the high and low. I'll just see how the market performs in the next few days, and I'll just remove some of the lines because the cycle will start over again, and I'll come and do this on Monday afternoon, and then go from there. So what else do I need to explain? That's it for GA. I'm going to go into gold, show you some more examples, then I'm going to go into volume and so on and so forth. So yeah, thanks.